75, 78, and 84, 89 would be the next little resistance bands based on chart structure, not volume. And you can see that we've got volume in the 70 area where we are right now, the volume again in the 81 to 85 on 4-handle price scaling. So this one says higher. Apparently, the Berlusconi resignation gives Italy a chance to come back. Now, if any of these countries are going to get any money or any help from the euro, they're going to have to sign or pledge to cut taxes, to cut spending and to raise taxes according to the formula developed by the EU before they would give them money. Greece hasn't done that yet. They've signed it. They've agreed to everything. They get the money. Then they go their merry way. So perhaps Berlusconi was viewed as a impediment to getting those agreements signed. But it's not only getting them signed, it's getting them enforced. And that's what's hard to do. And making them enforceable, checking them, reading the books. I mean, you can have a company tied up 10 ways to Sunday and they can still cheat you. And think about what could happen at a country level. So it's very, very difficult if the person you're doing business with is of such character that they'll tell you anything you want to hear just to get the money, then run. And it's pretty hard to put a whole country in jail. So here we have volume higher. Here we have a market moving higher. Here we have a new distribution started in J period right here. So this market is pointed higher too. Structurally, we've got this 76, 77, which would tie into a pivot high at 78. Then we have 86 to 90, which would tie into previous pivot points right there. So these are the two areas of resistance up above. As I say often, I have no idea. I mean, to me, the market's not up on fundamentals. But that doesn't stop them from trading higher, and we're smart enough to see that. This morning, we had a buy at 60 to 62 in this contract. The A period low came into the 60 area. The B period low was at 61. The C period low was at 56. So we got nice rotations. We had nice winning trades. They didn't develop to the long side. Our last buy was in the 55 to 57 area, and it produced a bounce in C period, but that made the requisite or the expected number of ticks, but it came down and we got on this 4/5 letter ledge area. Low volume number, and the market holds, and now we're trading on the highs. So we had a sell at 69 to 71. We said it might take 67s to get in. 67 held. It was pretty easy to execute in the 64, 65 area, and the market eventually did trade down to 61, then to 56, and eventually down to 52, 53. So not bad. But this one confirms the F1 screen pointed higher. Okay, we talked about the short covering that happened when it took out. Then we got the news out of the EU. It still boils down to who's going to pay for this stuff. Where's the money coming from? We talked about the first thrust upward right here. This was short covering. Then this is the Italian news right here. Now, here's your high volume area. right in here. And the market is pulled back to that volume. Most recent in the market's memory, plus our long-term distribution. It holds, and when you take out this high right here, you can get long, and that gives you a winner. And you get a triple top right here, and when you break this little tiny skinny bars low, that's as long as you would stay with the length, and that is a legitimate short. So you're short at 68.50. The low is 66.75. So you'd have been lucky to make 4 ticks on that trade. With a trailing stop order strategy in place like Bill Thomas uses, you'd have had your 4 ticks to the plus. So the trades set up and work as advertised. And the nice thing about our trades, it's based on what happens in the market every day. You do get higher highs, lower lows. You do get retests of support and resistance. There are value area highs and lows, and the market can't really take that away from you. Where a certain pair of moving averages will work fine for a while, and they won't work fine. In fact, Jack Schwager, who wrote the Trading with Wizards books, pretty well adopted the position that 5, 10 period moving averages, 10, 20, whatever, don't optimize, don't do anything, just trade the generic ones, and if you were going to trade those, you'd do just fine. Okay, looking at this screen, lower high, almost a lower low. Volume's definitely lower than the preceding day, so we can sell strength to retest this low, but if this low doesn't come out, we can take it to the long side and see if we can get back up into here. And the direction of the E-mini is going to set the course here for us. And why would the E-mini be trading higher? The euro currency is going higher. And the euro currency, why is it going higher? Because perhaps there will be a solution to the Italian problem. Okay, looking at the F2 screen, which is a P pattern, definitely put in backwards, or you can do a J split, and you got a new distribution down. Now this kind of fits with the auction. Tomorrow's the 10-year. If they are going to run an issue down, it'll be the intermediate one to set up the 30-year. So we have a potential mom right here, new distribution down. Structurally, we've got this 3-4 area right here. That's the first spot. Second spot up here is 7-8. Third spot up here is 12. So 1, 2, 3, and then 16 to 20 is 4. On the other side, we've got, can make a case for 30. We got this dent at 28, 1. Got this high volume number at 24, 2. Got this little dent and bulge at 20, 21, 3. And then the high volume down to the low volume number at 16 to 12 is 4. So there's your support and resistance points. Okay, I get questions all the time about what's the best way to follow the news. And probably CNBC for us because he has Santelli to give the bond auction comments. It's probably the fastest place you're going to find it. But I can't stand listening to that all day long, all the noise and the chatter. And so having it on as background noise, I just don't do it. The cold, hard reality of the fact, and the fact of the matter is that unless you're in the market, or have buy stops or sell stops positioned, you're not going to be able to benefit from that news. Now, it's comforting to know what it is to see what ran the market, but if the market breaks and then doesn't come back up and take out the breakout level, then it's gonna head lower. If it rallies and then won't come back and take out the breakout point to the upside, it's going to continue to rally, and that's really the cold hard fact is that you can never react timely enough to make any use of that information. Now, it's very comforting to know what the news is. It'll give you a better assessment of what's going on, but that reaction time none of us have it. None of us can get in to take advantage of that. Okay, if the E-mini is down, is up, excuse me. First sell band is 3 to 7, followed by 11 to 15. Based on what I'm seeing in the news, I would be really surprised if we could take this thing much below 129.24 tomorrow. So on the buy side, playing for a little bit lower, give ourselves a little room, 29, 21 to 25. We'll see what happens. That's true too, Gary. So inside information, paid for information, just looking at which side of the paper, which side of the news the paper's lining up on, you get a pretty good read about where the news is anyway. So the 10-year auction will be our biggest feature tomorrow. We've got wholesale inventories, MBA mortgage index, and then the EIA inventory levels for crude. None of those are big market movers. So that's kind of the way that I see it. We'll have to be on our toes again, protecting our trades with stops because of these surprise announcements that come out of Europe, but most of them seem to hit around 12 to 2 p.m. Eastern, and the one that took us up today I think was at 13:54. So we had another great day of trading. We were able to take advantage. Our levels and our ideas worked. Hey, life's pretty good for those who choose to trade. With that said, you guys and gals have a great evening. We'll see you at 0700 hours Central Time mañana. Later.